Easy Equities users, and welcome to our chat about RAs. I have two Facebook Live newbies with me today. This is Shaun. This is Shaun Krom, and this is Greg Strachan. Is that right? I always say it wrong.
You got it right.
You got it right.
Well done.
Thank you. And they're going to be chatting with me or just helping me answer some of the questions that you guys had about retirement annuities in general, easy equities, retirement annuities, and our bundles that we have on offer for retirement annuities. So I'm going to start this conversation with a question that I kind of always am presented with. What's so cool about an RA? Why do I need one? Like, I'm just an easy equities user. I'm already investing. What are the benefits of an RA? And I'm going to give you guys can test me and see how I answer, okay? So for me, easy equities RAs are awesome because firstly, it's very transparent, right? You can see what's going on in your retirement annuity bundle yourself as the owner of that bundle, which is cool. You don't always get that with other providers. The other thing is it's easy equities. So it's super cheap. It's easy to understand. There's no technical jargon, and we've kept things as low cost as possible. Am I right? That's the other benefit.
Correct.
And then for me, one of the major perks is I love that all my stuff sits in one place. So I love that I have my easy equities account. I've got the shares I'm investing in. I've got my tax-free savings account. Now I have my RA bundle next to my US stocks account. And all my savings and investing, I can kind of see holistically in one place. And I like that. I like the ability to kind of have everything spread out in front of me. So those for me are some of the major benefits, obviously along with all our normal easy equities rockstar stuff like no minimums, no monthly fees, and being super cheap. Did I miss anything?
Or why do you want to RA in general?
See, this is the brains behind some of this operation. So for me, I would want an RA in general because I want to save for my retirement. And because it has massive tax benefits, right? So I don't know if either of you guys, maybe Greg, you can expand on that a little bit.
And I was going to say, you covered all of the above, except what is an RA in itself rather than the benefits. And I think, as you say, that easy equities, the benefits of the easy equities platforms live out in the easy equities RA. But when it comes to deciding for your retirement, the vehicle in which you invest in, that's where deciding whether you invest in an RA or not is a very crucial one. And a retirement annuity is it's an investment structure, if you want to call it that allows people to invest within it with tax benefits, and that there's no tax on any growth or dividends within the actual investment itself. You only get taxed at the end when you start taking money out of the investment, and that's also then taxed at a specific tax rate. Importantly then, that money that you've contributed to the RA is invested according to agreed legislation that dictates the kind of risk levels that are taken. So you can't go and invest in a single stock so all your money gets lost, for instance, which is a big help for a lot of people to stop them doing stupid stuff with their money. The other thing is you can't access that money until you are 55, which is probably one of the biggest benefits, to be honest with you, because once you put money in, it stays there invested until you're the age of 55. So you can't go and need a holiday, go and take your money. You can't go and do stupid stuff with your money.
As we sometimes do, yes, #shoes.
Exactly. And then because of the fact that the growth and the income within the investment is tax-free in the investment itself, the compounded effect of all of that over the years is actually a very large outcome. If you keep contributing, you obviously get benefits of the compound interest.
Compound interest rocks.
The other benefit on an annual basis from a tax point of view is that the contributions that you make to your RA are deductible on your tax return. To a maximum, I'll just quickly do the legislation here so you understand, you can't contribute more than the greater of 27.5% of your remuneration, which means from your employer, your salary plus any fringe benefits, etc., or your taxable income. Okay, so you choose which the highest one, and that value cannot exceed 350,000 rand. So if you make, say, 2 million rand a year, then obviously if you contribute the full 27.5%, you would have contributed probably in the region of 500,000-600,000 rand. Therefore, your maximum deduction is 350,000 rand.
Okay.
There's still a benefit because
taxed on the rest of that contribution. Is that right?
No, the other portion is then rolled over and kept till you retire, and you accumulate that, which you can deduct against the lump sum benefit that you get at retirement. Because at retirement, you can then take out 1/3 in cash, and 2/3 of the retirement annuity, you need to go and buy a living annuity. And basically what that is it's an investment which then is constructed to pay you an income over your life.
Okay. Guys, we have to think about so much when we adulting, hey? But it's important. It's important to think about these things and to set these mechanisms in motion so that we can retire like bosses, you know, because that's
Absolutely.
what I want. I want the choice. I want to be able to decide what I do when I'm 55.
If we just go back, and I think there's something that maybe the guys are, and Shaun, just button here whenever you want, but on the Easy Equities page from a retirement point of view, all of the stuff that goes on there can be considered planning for your retirement because you're investing and you're in the right place, and the fact that you're doing it, well done to you. But key is there's tax-free savings, and then there's retirement annuity, and then there's pension, which often you get, or provident, which you get through your employer. And the decision really is, do I put it into the RA or do I put it into my tax-free savings account? And that's something that people need to work through. Obviously, there are limits to the tax-free savings account. And often the lower earners will contribute to their tax-free savings account with after-tax money. And the reason that's cool is because the tax rate for the lower brackets is low. So you're happy to pay the tax and then contribute to something that's tax-free thereafter. Whereas for the higher brackets, you want to get the deduction before you pay tax because your marginal rate is so much higher. So that's why it makes sense. And depending on where you are, you can then contribute. If you've already exceeded your tax-free limit, then it makes logical sense to put it into an RA.
Sure.
But realize it's not there like the tax-free savings account for a rainy day.
No.
In that if you want to go on holiday or if you're paying your car, can't get that money.
No. Doesn't have flexibility.
It's real retirement, long-term planning, which is very important because it's the one thing it won't go anywhere.
And sometimes you need that sort of barrier to stop you putting your hand in the cookie jar because things do come up in life and we do tend to do that. But I think ultimately what you're saying here and what the message is that whether it's retirement annuity or a TFSA, these are ways to help you save responsibly, first of all, and with the best tax benefits that you can get for where you're at in your life and what you're earning in your life and what your goals are, which is personal to everyone. So I kind of want to go over a little bit about...
Just quick, the last thing that's
Shaun
implied...
wants to say something.
The last thing that's implied in that is often for retirement, people start saving towards the end, like closer when they're older. But actually, because of the structure of how it works, it's better to start saving sooner rather than later because the compounding effect of the tax that you're saving builds up over time.
Exactly.
And you can imagine you'll earn more each year over time also. So there's certain advantages in that. You know, there's advantages in keeping it locked in.
Yeah.
But you need to plan it correctly. You know, you need to only put in that money that you know you can put aside that you aren't going to need to come out again later.
Yeah. And it's also, so it depends on that. And it also depends, you know, there's a whole risk element associated with it based on your age and your goals. And I think we'll touch on that in a little bit. For those of you, some easy users have already started using their retirement annuity feature. Yay! You're going to be balling. But some of you have not and are curious. So as a start, I wanted to say that if you want to use this retirement annuity, the RA feature, let's say RAs, retirement annuity is a long word. RAs on Easy, you need to activate your account, which you can do in your profile, in your account settings, if you haven't already, and go on to add beneficiaries, and then you can actually start using your RA account. And you'll see all the kinds of different bundles there are available in that account. So while we're here, a couple of our users have asked us, why do I need a beneficiary? Like, what is that? What does it mean? Is someone else getting my moolah? What's going on? And from what I can assess, the answer to that relates to if something unfortunate had to happen to you or there was a death, we need to know where to send that money. Is that correct?
Correct.
Mm-hmm.
And we don't want to have to go through the delays of trying to source that information as and when that happens. It just makes things easier for you.
What's required
by
regulation.
Required. It's required by regulation. So that's essentially why you need to add a beneficiary up front in order to continue with your RA process. But I just thought I'd raise that because a lot of people wanted to know why.
And you can change it. You can change it. I think the biggest hindrance there is it's quite a logical thing. Like, who's the beneficiary of this? So it's like quite logical. It's the person that's going to take it over. But the hard part, and I think what stems is as well, often we haven't thought about it because most people,
I haven't.
Most of the people, funnily enough, don't have a will. And they haven't really thought about who's my money going to. That's probably where people get stuck and ask the question is, I don't even know who it is. The important thing is think through that. You should have a will if you don't have one. And if you don't have one, go and get one soon. But realize that you can change it. So if you say it's your wife now and you get divorced, you can change it. Or you could put spouse. So you decide how you go about doing that, but don't get too caught up with it. It's just something that the legislation enforces us to have.
So I have sisters, so whichever sister spoils me the most on my birthday, we'll start there and we'll work with year on year. It'll be an ongoing battle. Okay, cool. So then another question that a lot of you guys had, and I'm going to invite you to ask us questions as we talk. You're welcome to ask your questions live. If there's something that we've mentioned that you want us to go back to or explain more on, please just comment and we'll be happy to do that for you. And if you have other questions, you're more than welcome. I'm just going based on what a lot of you have already asked me. So butt in as you like. Another question that a lot of people had, just in terms of getting their RA set up and sorted is, do I need a tax number? What if I don't have a tax number? What is the requirement there? Are they required to have a tax number? Obviously, the tax benefits is what you want to reap out of setting up an RA. So
you need a tax number.
So you need to be tax registered. You need a tax number. Okay, cool.
You need a tax number.
And anyone can invest in an RA, even kids, right?
Correct. They can. And we've actually got a frequently asked question on that, and it explains exactly what you need to do to get set up with a minor account. But remember, minors are taxable in their own right, so it's very simple to open a tax number for them. And in the event that your minor earns an income, they need to pay income tax. And
they're like a YouTube star or something.
They're subject to the same tax laws as we are, so there's nothing stopping you getting that done.
Okay, so those are some of the sort of nitty-gritties on getting your RA set up and sorted. Now you've got this RA, you feel like a boss because you have a plan for retirement, you're going to do this. How much should I start with? Like, what should I start investing with? I'm saving towards my RA. I mean, on easy equities, there's no set amount that you have to start with. I think that's important. If you only have a small amount to start with, then that's what you start with.
I think that's a brilliant question. And I want to turn it around slightly in that a lot of people gave us feedback that they're waiting for money to start. And maybe there's a misconception that a lump sum is required. And that is one of the truths, in a way, that Easy Equities as a company, through the way in which we do business, has broken down and smashed that barrier, because it's a huge barrier to entry. Minimum investments. What is the minimum investment, et cetera, and it stops a lot of people from investing. And the key is with Easy Equities, you can start with as little as £5. So the answer is to start off with, you choose what makes you feel comfortable. And you can do that on Easy Equities and see how it works. So that's the first thing. The barrier is gone. The only barrier now is to decide what is affordable for you. Mm-hmm. And what you want to, like Shaun mentioned earlier, what you prepare to contribute that you're comfortable that you don't need. So don't put money in there that you feel is for your holiday because it's gone and you can only get it at 55.
Yeah.
So that it really comes down to a affordability thing. But the beauty about Easy Equities is that if you can only afford 20 Rand a month, you can invest that 20 Rand a month and get the same benefits that any other person can get. And we don't discriminate on the size of the contributions. I think that's a really, really important question. And I hope that breaks the barriers down, because A lot of people are waiting,
yes, till
whereas
they
there's
get
no
to a
need to
point.
wait.
So I'll use myself as an example, if I can relate that to the tax-free savings world. When I started contributing to my tax-free savings account, I could only start with $300 because that's kind of what I was comfortable with contributing. And as I've grown as an investor, I've increased that slowly month on month to a point where I'm investing triple that now. And I hope to get to the point where I'm investing my full yearly limit, because I've grown in my own career and my own aspirations for myself and what I'm comfortable investing in. So I think it depends where you're at, but you can start with as little as $20 or whatever the case may be. Now, I just want to take a question here because I think it's a good question that we've been asked. Ollie Russell, thank you for the question.
Ollie,
hello. Nice. Thanks for joining us. Ollie is asking, who is the RA manager? And that kind of brings me to our next point, Ollie, so I'm glad you asked. So within Easy Equities Retirement Annuities offering, there are a number of different managers and different bundles that you can choose from. So at the moment, we have Emperor Asset Management and Canon as partners, and they have RA bundles that are available. But we are looking to bring on a selection depending on the agreement that we have. But we're going to be getting a selection and a range for you to choose from. So maybe it's also a good time to talk about, okay, so there are these bundles. Which one is the one that I should be choosing? How would you think people could go and assess that?
so I'll answer the first part, and then what I might do is pass the next part on to Shaun, who Carly's invited Shaun because he's the asset manager or the fund manager at Emperor Asset Management, and he can maybe explain the various different bundles that they have on offer. So the first thing is on Easy Equities, a starting point for a newbie is to go and take the Riskalyze risk profiling questionnaire that we put on there. That's a great starting point because it helps you identify what type of risk profile you are. And then once you've gone through that process, you'll be assigned a risk score. And then each bundle that is on Easy Equities, and specifically within the RA, has either a bundle number, a risk number attached to it, or a risk range. So what you can do then is try and identify the one that suits your profile as an investor. But to be honest with you, that's a starting point. What's the nice thing about the RA is that it's a long-term investment by nature. You can't touch the money in the short term, so you can make the call as to what type of risk you want to take there. And often, because it's a longer-term investment, you can tend to be a little bit more aggressive. Because you don't need the money for it.
Yeah, so on that, generally when you talk about risk, it's two sorts of risk that you can think about. There's sort of the risk that you're willing to take. That's the sort of risk that when you go to sleep at night, you don't worry about your portfolio falling 10% or something. It's like what you actually emotionally can bear, if you'd like. Then there's an actual risk that you are able to take, which might be different to the risk that you might be willing to take. So you might be, let's say, a 20-year-old, and you buy an RA, so you're only going to retire in like 40 years sort of time. So you might be a very conservative guy and might stress out if you lose 5%. But given that you invested for 40 years, you should actually be taking the most amount of risk because you have more than enough time for that 5% loss to work its time out. So you need to take both those two things into consideration when, particularly for an RA, actually. And then,
of course, aside from differentiation by risk, I think there's also just differentiation by strategy. Different managers will have different strategies, and we've got another question here, actually. Let's see. So the first question we've got here is from Lawrence Wolfart. I hope I've said that correctly, Lawrence. Forgive me if I don't. How do I see the fund breakdown of my RA on the EE platform? My current totals of each stock in the fund. Not too sure what you are.
No, so that's just if you go into the RA, there should be, I think it's called fund description or fund underline. You'll see there's like a drop down, and it will list every single share or other ETFs.
Okay, so I think then it would take you to the bundle investing page, and you would click on the description of the bundle, and it would give you a breakdown there of what's actually inside and the costs.
So generally when you actually have a look on the bundles, you'll see like generally 3 types of bundles. It'd be like firstly, the assets that you can hold or how the portfolios are comprised are restricted by regulation. So, for example, you can't have more than 75% in equities. That's how much the government decided is the most amount you can have in equity. You can't have more than 25% in foreign equities. So that's why you can only invest in bundles, and you can't go and invest in underlying shares because the manager must make sure that it's appropriate. It's called Regulation
Meets
28.
regulations.
Exactly, so it meets those regulations. Then once you want to choose which manager to invest in, you can obviously see, I think there's a description about the manager, how they invest, and then also you can go and see every single instrument that that manager has invested in. So I can only talk about Emperor as an example. So like Emperor has, right now it only has one bundle for each category. So you'll see, let's say you do your risk profile and it turns out that you're a medium risk guy. A medium risk person might have 50% in equities. So you can go and see how much is invested in the S&P 500 as an example, or in the Satrix top 40 and so on.
Okay.
And then what we are for ranks, and let's just call that like a core range. And then there's also, again, only for Emperor, I don't know about other managers, there'll also be an enhanced range where instead of investing only in ETFs, it will be a mixture of ETFs and shares. So when you go and look at that breakdown, you might see that some of it is invested in Satrix MSCI World, but then you'll also see in South Africa that a certain percentage might be invested in Discam or Clex or Standard Bank or whatever. And then what's nice is you can see every single share in it. And then what you can do is you can match the description of the manager or the bundle to the underlying shares. And then you can go and say, okay, how does that medium one compare to the high risk one? Or how does that manager compare to the other manager? And then you can have a view like, do you like this portfolio and the way that that manager manages his shares compared to somebody else?
Absolutely. So there is actually choice on many levels in terms of these.
There is, and just to go back to that question about reporting, because at the moment, once you purchase the bundle, and something we're in the process of testing now, is the reporting on that bundle that you purchased. I think what he may be referring to. It's in beta at the moment, the actual proper report that talks to the return, the risk, and the underlying constituents of your bundle and how they've performed. So that's in beta now, and it should be available very soon for you to be able to download the actual PDF report that explains how that specific bundle has performed in your RA.
Okay, that's very cool.
If you at the moment that's not there, but if you go to the actual bundle on the RA and you drill down, like Shaun said, it'll then tell you what is in the bundle and in what weightings.
Okay.
So if you want that information, but it's going to be launching very soon, the actual detailed report specifically to each investor.
Just don't when you do invest, just don't put over much attention on previous performance as an example or what has happened. Remember, this is something that you're in for the next 30 years or however long. What you really want to buy into is, do you like the philosophy that the manager has put together in order to manage that bundle? Are you happy with the fees of that bundle? And given what the selection is now, is this the sort of manager that's going to be appropriate for you for the next 30 years? Because chances are you're not going to be able to find the best manager for this particular time. You know, this month one bundle will be better than another bundle, and next month maybe another bundle of another bundle. But what you really want to do is ride out those waves of performance. So you want to make sure that the person or the bundle that you're buying is appropriate for you over an extended range of time.
You can apply the same logic to dating, right?
Elaborate on it to us.
Just thought I'd break the ice, guys. Getting very serious here, and this is supposed to be fun, right? So I'm going to apply these analytics to my dating algorithm, shall we say. I want to take another question here. Harry Isaacs has said, when can we see other bundles come online? Also, will Satrix NASDAQ 100 feeder portfolio be an option? So I think, Harry, from my point of view, we are in the process of onboarding different kinds of bundles and partners. Like I mentioned, we have Canon on there as well. Canon Asset Managers, that's the full name. So they've, I think, got 2 bundles on there.
One RA bundle.
One RA bundle, and we're looking to bring in more option and more choice from different providers in time. You know, I can't tell you exactly when, but soon. We're going to be bringing a lot more variety. Melissa Stroh, you had a similar question. How soon will more RA fund options become available? And then Anton Philip Nell. Anton says, when someone leaves South Africa, let's say 50 years old, and has been paying an RA every month for 20 years, how do you get that RA out of South Africa? That's a good question.
There are rules around that passport, and to be honest, I don't know exactly how they work. And it depends on different countries. So, like, I know Australia and South Africa's got some sort of arrangement between the two. But I don't know the details.
Anton, can we get back to you with more detail on that? I've also heard similar to Shaun that there are some countries that we have an agreement with, but I don't want to give you the wrong information. So I will post that in the comments section once we finished discussing this. Ali, thank you. I'm glad we were able to answer your question. Raymond, welcome. Nice to have you with us. Lawrence, I'm glad we could answer your question for you as well. Quintus and Carl, thanks also for joining us. Okay, so you mentioned as part of the last question we were asked, you need to kind of look at the costs and you need to decide, also factor that into your decision when it comes to choosing a bundle. Talk to me about what some of the costs are. There's different ways of looking at it. So are they standardized costs?
Maybe I should cover that quickly because I think it's an important one. We're in the process at the moment of standardizing the reporting of the costs so that it's very transparent and clear. And in essence, we want to make there two costs for the investor to be able to see and then be able to drill down to understand the detail. But essentially, we want to show you two costs. One is what is the RA cost to administer? It's called an admin fee, and that is 0.3% per annum. And then the next question you should ask yourself is, what's the investment that I'm investing in going to cost me on an annual basis? And that can be classified as total investment cost. And that is then broken down further into bundle fee, the expense ratio of any ETF that are within there, and any transaction costs. And that, obviously, there's three of those. But for all intents and purposes, if you want a high level, what's it going to cost me? It's basically total investment cost plus the bundle, the administration fee before VAT. So that's the easy way. We want to standardize so you can quickly see that's more expensive than that, and I want to take the more expensive one for this reason. And then you can then break it down and say, okay, how does the total investment cost vary by manager? And I think that's important because each manager has the discretion to charge what they want for their IP. And Shaun can talk a bit more to this and he'll elaborate on it now. One of the things in there is transaction cost. Now, transaction cost by its very nature is dependent on how much transacting takes place within the investment. If you buy 4 shares now and you never change it, then you're going to have a big transaction cost to start off with, and then it'll just go slowly down to very, very small, annualized over a 20-year period. And that's what we want to try and incorporate. So maybe you can talk a bit more about that.
As you were saying, so the two sort of fees is the one you can't get around. It's just what it is your RA fee. That's your administration fee. Then when it comes to the investments, it's actually broken down into 3 different components. The one is how much is a manager actually going to charge you to provide this service? That's sort of a fixed fee, whatever is specified in it. The other one is what is your transaction cost? This is the same cost you get when you have a normal Easy Equities account.
Your brokerage.
Yeah, so that's just your brokerage.
1.25.
Yeah, so that's your brokerage. And then there's also costs inside the portfolio. For example, you might invest in, let's call it the Satrix 40. So Satrix 40 has a fee inside of that, so you'd have to pay that fee too. So your total investment cost, when you look at it, is you obviously need to pay attention how much a manager is charging and is he worth that cost and are you happy to pay that fee? But you also then have to see what is the strategy and how does it meet the trading costs. So a particular manager might be, let's say, a really good manager. If you were invested in, let's say, Warren Buffett, and you really dig Warren Buffett.
He's my manager.
And you really dig Warren Buffett, and even though it's not his strategy to trade a lot, let's say George Soros. So George Soros, who's also a really good investor. Now, if you had to see that his transaction cost was super high, you'd be, well, that's okay. George Soros knows what he's doing. I don't mind having a very high turnover in my portfolio because it's George Soros. I'm happy to pay for that. Whereas if you don't trust a manager, maybe you want a less investment cost because he has a more static portfolio. Similarly, how the fee or your transaction fee is going to be determined by the strategy. So like previously, Emperor used only a momentum strategy. Now, sort of momentum strategy, don't worry about the details of it, but it does result in a high portfolio turnover, which does imply a high transaction cost. But at the same time, it does imply a higher risk premium. So you should expect to return more. So fee is one component, but if that high fee is also producing a higher return, you should be okay with that.
Then you've got to weigh that up and decide what you are the most comfortable with.
And you'll also see that total investment cost will change over time. So there might be a time where the portfolio manager trades a lot because, I don't know, wants to be more involved in commodities, let's say. So then you'll see a big transaction, and the other time it might be stable. So there are quite a few things, you need to look at what the manager's doing as well as the cost in order to
and just to explain that, not to dwell on it, but I've had a lot of questions around why does it vary and why can't you give me an exact figure? And it's because of exactly that. So just take a simple example. If you invest 100,000 Rand lump sum into your RA today and you invest into a bundle, and regardless of the strategy, because you're spending all that 100,000 on buying underlying shares or instruments, you will be charged 25 basis points that day on that transaction. So immediately your cost for the year is 25 or 0.25%. Okay, but now assume that you never contribute anymore, and you hold that for 10 years, or no, let's say till your retirement for 25 years. The transaction cost will reduce, and it'll reduce at a pace determined by how much the manager changes that portfolio. So if he doesn't change anything for that whole year, your transaction cost for that year will be 25 basis points or 0.25%. In the next year, if he doesn't trade at all, by default, your transaction cost per annum has now halved.
Yeah.
It's gone to 12
nothing going on.
and a half. Does that make sense? On average. So that's why it's important, and that's why it's difficult on the transaction cost. It's always a estimated annualized figure over a 3 or 5 year period to give you an understanding of how often they transact.
So again, at Emperor, one of the things we look at each time before you trade is the expected gain from doing this trade warranted given the known cost of this trade. And do that for every single share and the portfolio in total. So there's reason to have that transaction cost, and there's not a lot you can do about it.
Yeah.
Okay, I've got a question of my own, but I want to just ask this question that's come in from Carl. Carl, thanks very much for asking the question. Is there such thing as a TFSA RA?
No,
wow.
Wow. No, they're two separate things altogether.
But an RA has the features that a TFSA has. I mean, RA is built for that.
They're very similar.
Except for
they're built for a similar purpose, but they're not within each other.
Yeah.
Can't have that.
Exactly.
They have different tax benefits and restrictions.
They're two different structures legislated by the government.
Welcome, Dane and Lungile. Thanks for joining us. I wanted to actually ask you from my own point of view, is there sort of traditional costs? So we obviously operate on a different model, but what would the traditional costs be on a retirement annuity for someone year on year, or just straight off, just as a generalization? Is there a way to generalize it? Or
no, I would probably say there's a range of anywhere between 1.5% at a very minimum up to 4.5%, sometimes even 5%. It just depends on the layering and the platform, because
it's multifaceted, as you
it is. So you could have a platform fee, your advisor fee, the asset management fee, transaction costs, the RA administration fee, and you just simply, if you've got an asset manager charging you 1.5%, an advisor charging you 1%, that's already 2.5%. A platform fee of 0.6%, you're already into the threes.
Okay.
So that's how it can add up.
It wouldn't be strange to see an RA without an advisor being charged at like 3%.
Yeah.
You can get it cheaper. There are some cheaper, but 3% I would probably say is the average.
And what if I have an RA somewhere else? I've been investing with someone else or with a different provider, and now I'm ready to sort of take charge of my own RA and I want to move it to easy. Is that something that's possible? Can I do that? What is the process?
You can. It's a very easy process to go through. It's not necessarily quick, but it is relatively easy, and we try and assist people as much as possible to give them the information to be able to transfer. Basically, we've got another frequently asked question which we'll share with you guys. But essentially, in principle, this is how it works. You've got an RA with a provider. Essentially, you need to tell that provider that you want to move it to Easy Equities, and they essentially will tell you what you need to fill out and what details you need to give them to instruct them to send it to Easy Equities. When you instruct them, we ask that you tell us at the same time as you're instructing them, so that we're in the loop and we can be involved and chase that process. Because essentially, they need to kick it off, and then there's a process between that institution and Easy Equities RA to get certain things signed legally, and then that then is then transferred across to us. Important to note that if you're in another RA and you invested in unit trusts, that we don't obviously offer unit trusts in our RA at the moment, so it needs to be what we call a cash transfer, not a unit transfer. So essentially what they'll do is they'll sell that unit trust in your RA, realize the cash, then transfer that cash into your Easy Equities RA account. When that lands in your RA account, you can then invest that money into your RA account.
As you want.
You just need to check. There generally shouldn't be any surrender fee or penalty fee, but you have to check with your current provider before you do that. And like Greg said, you get the money, and then from then you have to choose what bundle. You aren't going to be investing in the same thing as you were previously. But then again, if you were investing in the same thing, there probably wouldn't be a whole lot of reason to change. So
yeah, and I think an important thing there is cost is something that people are very sensitive to, and you would need to go and ask the hard questions of your existing provider, and it may be that you're happy there and you got a good cost deal, great. But ask those questions, get the exact cost, and then you can then compare it to the cost at Easy Equities. And the reality is, if you can save 1% or even 0.5%, but if you can save 1% a year, compounded over the next 30 years, it's massive.
Well, National Treasury actually came out with a paper that was quite interesting, and they did that sort of calculation. So assuming you have I think the average was 40 years till you retire, but they have 10, 20, they did each one. And they said, don't quote me exactly on the number, but it was more or less like this. If you're within 40 years of retiring or 30 years of retiring, costs eat up 60% of the total amount of money that you will get when you retire.
That's depressing.
And that's why is that? Because don't forget, it's 40 years of which you've been charging fees. Let's say that's 3% fees. If you do that every year for 40 years, and that fee's being charged in good years and bad years, you can imagine that if instead of paying those fees, you kept it for yourself, that could make a very big difference.
Yeah, that's massive. And in terms of the turnaround time, if I wanting to move my RA today, and I've got all the paperwork sorted today and I initiated that process, what are we looking at in terms of waiting for that?
It shouldn't take more than a few weeks, but it can take up to 3 to 4 months. And that's really dependent on the institution that is releasing your RA. So,
how aggressive
for instance, my RA that I moved literally took a few weeks and landed in the Easy.
It shouldn't be more than
2 weeks. It's difficult to say, but what I can tell you is that from an Easy Equities point of view, our team in the background is chasing that on your behalf, following up, making sure that the right documents are in place, and it's always helpful that you as the investor chase the institution as well, because it
shouldn't be that long. Because if you think about it, if you in another thing in your own unit trust, the turnaround time on unit trust should be 3 to 5 days. So 3 to 5 days, then some admin of getting that cash and transferring, which is essentially just a bank transfer, should be another 5 days.
But I think it's
double
important,
that for bad admin. So.
I think it's important to note that every provider will have its own systems, its own things in place, and it's really on you to just go and chat to them. And
just on that, it's what we did was to try and make it helpful is that if you go to the Easy Equities, go to frequently asked questions, just put their transfer, you'll see RA transfer. And at the bottom of that frequently asked question, we've actually listed the main providers and got their requirements from them so that it's easy. So in the event that they'll accept the document that we've formulated, it's there, you can download it, fill it out, and all they need to do is email it to them and to us, and you're sorted.
Yeah.
For others, if they aren't there, it's a phone call. And it's not that difficult, to be honest. I phoned a provider the other day, and I was provided with the form. So it's not difficult, but remember that once you put the instruction in, your life moves on. You can't touch this money anyway. So whether it takes 3 months or 2 weeks or 6 months, it doesn't actually really matter. You're going to get the benefit in the end.
Yeah.
It's going to come across, and you can do it. And you can always open your Easy RA and contribute to that. Nothing's stopping you having 2 different RAs. So it's not a big problem, actually. So don't worry too much about
but it's my investment bounty, so I want to know where it's at. So it's good for everyone to
and
just
on the
have
same thing on that is the nice thing, it just comes back to the thing that Colin was talking about at the beginning, is transparency. So if you had an RA already and it's in a unit trust, chances are you don't know, not chances are, you definitely don't know every single share in what proportion it's being held in that unit trust. But as soon as you buy in the bundle, you know, coming back to that other question, how much the NASDAQ makes up as a percentage of the portfolio and how much, Mr. Price shares you have. You know every single share in every single proportion in that.
We've just had another question here. Gerard Samuels, thank you very much for your question. And I think this is probably going to be one of our last questions. So if there's anything that you want to ask, now's the time. We're going to start rounding things up. Gerard asked, I just joined the chat, not sure if this was asked. Can I just put a lump sum in my RA and will it compound?
Yes.
So that was easy.
Yeah, exactly. You can put a lump sum in and you can put as much money in as you like. And by default, once that's invested, it's then subject to the laws of compound interest, be it if it's invested in a bundle or be it it's in cash, it's going to compound. Just remember, from a tax perspective, if you put in more than your allowable allowance for the year, then you only get the benefit on your allowable allowance from your tax deduction point of view, and the balance you only get benefit at retirement.
And that's 350,000 a year. That's
maximum. But remember, it's 27.5% of the greater of your remuneration, i.e. your salary plus your benefits, or your taxable income.
You know that like off by heart, eh?
And just quick, on a compounding sort of point of view, it does actually make more sense for an RA to put in that lump sum. Why? Because you get your tax benefit sooner. Assuming that you were going to make, let's say, 110,000 upfront or 10,000 every month, it makes more sense to put in 110,000 right now because of that tax benefit is sort of accumulate or is going to start accumulating from now instead of drip feed over those 12 months.
And I'm just saying the tax benefit within the RA in that the growth, not the tax benefit on your income.
Yes.
Okay, we've got one more question. Cabello, is there a way to check how your RA is doing every 6 months? So I think we did cover that in the beginning of the chat. And before we touch on it again, I just want to let everyone know that this chat will be available to rewatch in case you missed anything from the beginning. If you've just joined us, we'll have it posted on and pinned to the top of our feed, and we'll have it on our YouTube channel afterwards. So don't worry or stress if you've missed out on anything before. But we did sort of touch on this in the beginning. It's in beta testing at the moment.
Reporting specifically for bundles within the RA and just generally is in beta in that it's being tested and should be released into the live environment pretty soon. So, which means you can track it monthly, quarterly, 6 monthly, overall since inception, everything. So you can really have a proper look at how your investment is
doing. So similarly like Easy Now, you can log on and just see how much you have. So obviously you'll have that feature, but like Greg said, there's going to be a proper reporting feature where you can say, how did it grow between this month and last month?
Yeah. Which will be nice. It'll be nice.
Watch the space.
Watch the space, guys. And I'm sure there's going to be lots more to come. And we'll continue this discussion. Please comment below this video if you have any more questions that we haven't covered. I would encourage everyone to go check out our FAQ section under Learn on our site. Go and check it out. and you'll probably find there's a lot of questions there that are directly answered. I'll make sure that we post the link in the comment section as well so that you can easily reference that. Thank you guys for joining us. Appreciate it. And if you're in a pickle or you're stuck on something specific, you're more than welcome to contact our amazing help team, helpme@easyequities.co.za. They'll be able to look up your account details and help you out. Thank you. And until next time, all the likes, all the loves. Thank you.
Cool.